For like a year, 3.5 of hosting these events. Thanks everyone for coming. They're a weekly event if this is your first time here. And it's really a platform for the community. So all of you, if you have ideas for talks or things you want to hear more about, someone suggesting some sort of crypto bullshit, we're going to hear a lot more about that coming up because it's a good idea. And if you're passionate, you want to talk about something, please talk to me because we're here for you. And it's a platform for everyone. If you happen to have some dollars and you're excited about this event, please talk to me too, because we're always looking for sponsorship. Anyone here looking for work? Anyone here hiring? Well, it's not good. Usually the ratio isn't that bad. But what I'll say is often you're not going to get a job here tonight, and maybe that's not what you wanted to hear. But what you will do is you'll meet someone here, we'll meet someone, we'll talk about you, you build an impression over time. And most jobs that are landed are not through a posting. They're through who you know. And I would say it's like 75% of jobs are landed through who you know. And so the real importance of a networking event like this is to come here, talk to people, learn more about what they're doing, and really tailor your pitch. And so when you do get called for an interview, you know what to say, you got a story to sell. Tonight's really exciting. We have founders here, we have investors, and when I started at Manitoba Innovates last June, I heard that, hey, there's no investors, there's no deals, Manitoba's a fucking desert, it really sucks here. That's total horseshit. There's lots of deals happening here, there's lots of startups here, there's lots of startups hiring. That might not be here tonight, but there are lots of startups hiring. There's jobs to be had, and it's not nearly as bad as you think, and I think this panel is going to talk more about that. If they don't, then I apologize. That's what I asked them to do. But we'll see what this looks like. So Emily, Iain, and Sandy are all good friends of mine. I think this is going to be great. Thank you very much for coming.
Thanks everybody for coming. Thank you, Paul. All right, so
just for our panelists, if you can touch the microphone with your tongue, that's the right distance. Just don't actually do it. That's the distance.
Perfect. Can everyone hear me in the back? Okay, great. Well, thanks for having us out tonight. We're here to talk about Trillick Ventures, which is Winnipeg, Manitoba's first venture capital fund, first active local venture capital fund. And on stage with me today, we have two of our limited partners for the fund, Emily and Sandy. Sandy wrote the very first angel check into Skip Taiv, as well as Taiv. She's the general partner of the Women's Equity Lab, the managing partner of Capstone Ridge Group, and a limited partner in Trillick Ventures.
That's true. That is true.
Yeah. And Emily is the co-founder and chief operating officer of Chekkit. And maybe I'll let you talk a little bit about Chekkit, Emily.
Sure. So Chekkit is a startup that I founded, and we do business customer communication. We integrate with Instagram and Facebook, and we do SMS, texting. We have a chatbot that shows up on people's websites. It's like, hi there, how can I help you today? And we do it all in one. So we help people manage their client customer communication every single day.
So Emily first started investing as an angel investor in Construction Clock last year, and then she came in as a limited partner into Trillick Ventures on our first first close earlier last month. So I think we should start with talking a little bit about what a fund is, perhaps, because I think a few people have expressed that they wanted to know more about how it is structured. Like what is a limited partner, for instance? So the way that a fund works is it's essentially a pool of individual investors' capital that get pulled together and then invested by a manager. So Trillick Ventures is the manager. I'm the general partner of that fund. We have 3 venture partners that are a part of our fund, which I'll talk to more later. And when we pool the investor capital, we can then make investments into our early stage technology companies. So we will be raising a target of $15 million total of our fund, and we will be investing in about 20 to 25 pre-seed and seed stage companies. Our pre-seed investments will range between 100 and 500,000, and our seed stage checks will range between 500 and $1 million. And so this was one of the things when I grew up in Manitoba, grew up to be a teenager, and then I left, and I was gone for 20 years. And when I came back last year and started talking to startups, one of the biggest things that I kept hearing was the lack of access to capital that exists here in Manitoba. And there's so many great founders building businesses here. There's so many great companies that are being built here. And I saw it as a really huge opportunity to pull together our business community, our entrepreneurial community, pull together their capital and start investing in ourselves. And maybe I'll start with you, Emily, as to how you've had success as an entrepreneur in your own venture, and now you're investing in your community and your fellow founders, your peers. Maybe talk a little bit about that.
Sure. Yeah, so when I first invested in Construction Clock, I was, you're thinking about where do you put your money in and how do you invest in your community, or do you want to invest in just index funds or US funds or whatever. Everyone has some kind of strategy for their retirement or for the future. And so I was talking to Lasha Glennie from Economic Development Winnipeg, and she was telling me about the small business venture tax credit. Small business venture tax credit, and how you can get back a percent of your investment if you invest in a Manitoba company as a Manitoba resident. And I was talking to David Peters, who owns Construction Clock, and he was looking for investors, and he actually just posted it on LinkedIn. And I was like, oh, you're looking for investors, can I invest? And I messaged him, and he was like, sure. And so I go to their office, and I meet them. This was one of the first time, I think it was potentially the first time I'd ever met him, or second time. And he introduces me to their whole team. I talk to their CTO. I learn a bit about their business and all the people that they're hiring. They're in a business that's really similar to mine, so I had a lot of trust where I could see what success looks like in that field and whether they know what they're doing. So I trusted my instincts and invested in them, and it worked out. And then from there, I was kind of like, well, if I'm investing in companies, why wouldn't I invest in Manitoba-based? Why wouldn't I invest in my community, at least for a portion of a portfolio, right? Yeah, it makes sense to support local. And I think when you think about supporting local, oftentimes you think, oh, I could buy a coffee from the place next door, right? I could go to a local restaurant. But what about your investment dollars? Are you investing in the people around you?
Great points. And Sandy, you've had success as an angel investor too. Maybe talk a little bit about that, being the very first check that was written into Skip the Dishes and to Taiv. And not the first, but you've also made a number of other angel investments into Manitoba companies.
Sure. Yeah, well, I was kind of in the right place at the right time when it came to Skip. My office was actually located in the Manitoba Technology Accelerator, and I got to watch this company continuously bringing new people in and doing wild and crazy things, and playing with basketball hoops and sitting at ping pong tables. And, well, who is this and what do they do? So watched them grow from, my son was employee 15, I guess, and I think by the time I stopped looking, there were 2,000 people. So, having seen Skip and watch the incredibly smart young minds solving, disrupting, I guess we call it food delivery now, but at the time, it was a brand new thing. People, when I invested in it, thought I was nuts. And looking back, I wasn't so nuts. But I bet on an idea that I thought was transformational, and people I had lots of confidence that they could pull it off. And then when I had success with that, I thought, I went to an angel investor conference, learned about this thing called a flywheel effect, and that means those of us who get an exit, if you put the money back in again, you continue to help the ecosystem grow. So that's what I've been doing for a long time. And it was actually my son that found Taiv because one of the Taiv founders had worked at Skip, and they were starting this new idea. And once again, I thought, it's out there, but this could be good, hardworking, and that was 2018, so that was a long time ago.
Yeah. And now, as an angel investor, you kind of were a bit of a diamond in the rough where it's really hard to hit a home run your very first investment, which is very unlikely. But you did that. And tell me a little bit about how many deals did you look at before making that first investment into Skip?
Technically, it wasn't the first,
Oh,
because I invested in a couple before that.
okay.
That one was still alive, Capressa. Is anybody from Capressa here? Where's Trudy? It's a Kent Winnipeg-based company. They're still alive.
Yeah, they are.
Yeah, and hey, I'm still waiting for that day. David Kewick's laughing. Anyway, they are still alive, and they have potential. So, but I probably looked at maybe 5 or 6 or 7. Not a huge amount at the time, because it was very much, that one was impulse gut. That was, you just saw something that looked amazing and you watched it grow and you couldn't believe, every week, how many orders did you do? How many orders did you do? We used to think 1,000 orders was a lot. Now they probably do that a second. So, yeah.
And that's, talking about looking at a number of deals before making one, that's one of the things when I started looking at building this fund, I started talking to people who made investments in this town and outside of here. And so people who had said, oh, I've tried investing in early stage tech, I'm not interested. I said, okay, well, tell me a little bit about your experience. Oh, well, I made an investment in my neighbor's company, or I made an investment in my nephew's company. And so they've made 1, maybe 3 investments on maybe 3 deals that they looked at. One was dead, another one was still kicking, another one they haven't heard from the guy again. So it was kind of, not a lot of due diligence from an investor standpoint. They didn't look at enough deals in order to place enough bets as well. And that's where, I'd like you to talk a little bit about joining a fund, because you both have had, good success making a direct investment, but in a fund perspective, we will look at, and this is the way that the numbers work, we'll look at 200 deals in order to write 20 checks, and then that way we have enough bets placed to have the much higher likelihood of a few of those doing incredibly well. So in startups, we all know that a number of startups, it's a really risky investment, and so you want to make sure that you've got enough bets placed on the table, right?
Yeah, and that was kind of the reason why I wanted to join a fund in the first place. Was I'm a cautious person, especially with money, and I know that investing in one company and putting all your money there is not the best decision. So with a venture fund, you can diversify quite a bit, and there's going to be some heavy hitters and some that don't perform as well, right? So it averages out. So that's the benefit of joining the fund.
Yeah, so as I said, I went to angel investment school after I decided to get into this, and went to a NACO, National Angel Capital Organization conference in Calgary, I think about 2018, 2019. And that's where I learned there were these things called angel groups that actually invested together that made so much sense to me. And then you hear the data that says, you need to have at least 20 investments, because 1 in 20 can be successful, but it's really successful. So, it's one of these law of numbers, and if you're gonna do 200 rounds of due diligence to get 20 investments, most individuals can't really do that. So a couple years ago, I decided I'm only doing funds, which is why I got involved in starting up the Women's Equity Lab, which is about teaching women about angel investment. And then I was thrilled when Trillick finally came to town, where we can actually have a fund that's going to do something good locally.
Well, when you're only investing, so in the high risk bucket of your investments, if you're only going to invest 5 or maybe 10% of your overall net worth, it's really hard to justify spending enough time to do due diligence on 200 deals that take, unless you really, really love it. and that's where obviously this comes in handy, being able to do it. And when let's talk a little bit about deal flow, I think. Talk a little bit about the Manitoba ecosystem, the companies that we've seen here. You've chosen to invest alongside your peers here. Maybe talk about what you see here and why you think Manitoba has the foundational success of being a startup hub, a really good startup city.
Well, we've definitely had several successes, and Taiv and Skip the Dishes and Neo and Permission Click. They've all been really successful, and I've been hanging around Manitoba Innovates quite a bit, and I see quite a few founders coming in and out. And when you talk to them, people are very hardworking here. They keep their heads down. They have a mission, and they're trying to start something here, there's a bit of a gap in access to capital. And so that's kind of what the fund is trying to do, is to make the capital more accessible to the founders here. Because you want to be able to focus on building, and you want to be able to focus on selling, and you don't want to have to focus so much on just fundraising, right? And if you're allocating too much time to fundraising, you're not going to be focusing on building and selling.
And that's one of the things that we find that we're going to really focus on at Trillick, is bringing capital from outside the province here to Manitoba as well. So being the only VC writing checks into the province, pretty much, we're never going to take 100% of a founder's round. We're only going to write a quarter, a third, at most a half. And so we still have to help the founder raise the rest of that capital for their round. And I see that as a job that I want to put on our own shoulders, to make sure that we can help the founders get back to building as quickly as possible. So the way that we're structuring the fund is that 2/3 of our $15 million target fund, so $10 million will be invested into Manitoban companies, and then 5 will be used, that 10 will be for leading investments into Manitoba companies, so that we can show that we have conviction and we've written a big check into a Manitoba company so that it can help them go and raise the rest of it. But we also want to actively help them raise the rest of it. And that's why the other 5, there's 2 reasons why we have 5 that will be investing nationwide. One is to provide our LPs with exposure to the best deals across the country, so we're not solely limiting to the geography of Manitoba. We want to make sure, it was actually, it was right before he was on stage here in October, Matt Golden, he said, Iain, if I bring you a deal, make sure you don't have to turn me down. Right? So we want to make sure that we can invest outside of our geography to give returns to our LPs, but then also build working relationships with other venture capital firms, so that we can follow on in their deals, build good, strong rapport with them, so that we can bring their money back to follow in on our deals here. And that's how we bring more investment to Manitoba.
Yeah, I think the profile of a deal that needs venture capital is one, by its very nature, it's going to scale quickly. And I've always called the money side of it rocket fuel. If you're trying to build a rocket ship, you need rocket fuel. Some ideas need more than others. And that's part of the problem that we've had. So those great founders that I've invested in, some that have left the province or didn't come back after they had a success here, because it takes a lot of time. I think Josh Samara told me once they did 200 pitches before they actually landed a real VC. So if we can get the flywheel effect happening with Trillick and make it easier for our founders to get access to capital, and capital brings capital. I think the hardworking grinders, that's the other difference. The entrepreneurs here work hard. If you can get many, many millions out of Silicon Valley and blow it all and accomplish nothing, that's nothing down there. But we're not like that. People get money, they take it seriously, they take their investors seriously. I mean, 2 of the deals that I invested in during the COVID times, I got some of my money back. Like, they didn't blow it all. They actually got partway through and realized, this isn't the scale of opportunity I thought we have. I got to respect my investors, and I got money back, which that doesn't happen in a lot of other geographies.
And part of what we're trying to do as a value add to founders as well is help bring the capital from outside the province for them to close their rounds, but then also subsequent rounds. So like you mentioned on the venture path, if you take venture money, you're not just typically taking 1 round, you will take multiple rounds. And so it doesn't do us any good to only help you with 1 round and then let you flounder. So and that's part of the way that we've built this firm, by bringing in the 3 venture partners that we have. So I'll talk a little bit about them. You may all know Noah Polanski. He won the Leader of the Year up here at the Manitoba Tech Awards, CEO, founder of Taiv. So he's on our investment committee, and he's a venture partner in our fund. One of the main reasons why I wanted to bring Noah on board is because, one, he's just a brilliant guy, incredible character behind him. And he's also got terrific experience in the sense that he went through Y Combinator and has access to a tremendous amount of venture capital firms down in the Valley. His Series A was led by a European VC, so he comes with a ton of connections that can help our portfolio founders also raise capital faster, so he can open doors that way. The other 2 gentlemen we have on our investment committee, Mark Halati and Saf Hashmi, Mark, he lived in San Francisco for a number of years. He worked at McKinsey first down there before working at Facebook. Then he moved to Toronto, started his first startup there, which he sold after 2 years to Roblox. After that, he moved to Calgary. That's where him and I got together and became good friends. And now he's building a new company called Simple Hedge, where they raised their first $1 million on a $10 million valuation, their second on a 20, and now he's out raising on a $60 million valuation. And he's got deep ties into VCs in the Valley, really well-connected guy, and that we bring to our portfolio founders here. So, another terrific way that we can help founders raise subsequent rounds. And then Saf Hashmi. He was the principal and co-founder of the BDC Seed Fund. He's got 11 years working in venture capital. So again, I tried to bring together guys, people who are on our committee who fill the gaps that I lack. So as any good founder, you got to know where your weaknesses are or where you lack in experience. And so I wanted to make sure I surrounded myself with folks who could fill those areas for me and provide a ton of value to our community here. So those are the three that we have, and I think we're going to see a lot of value from not only Saf and Mark scouting deals outside of Manitoba, but them working with our founders here in Manitoba alongside Noah and helping them continue to raise subsequent rounds. Now,
I was going to ask you, have you explained more about the why and the return, the expected return?
yeah.
Why do people do this? Not just what is an LP?
So people do this for a few reasons. One, we're called capitalists for a reason. We want to make a ton of money, and that's probably objective number one. When you're in a high risk, high reward asset class, you want to be receiving a multiple on your money. And so in venture capital funds, you're targeting anywhere between 2 and 8 times X multiple on your money, typically on a really early stage fund. The larger the funds, typically the lower the return on multiple return. The smaller funds, you're able to write better deals, get really early into companies, and then see them really take off. So that's one reason why people invest in these. And then the other is really community. So it's really fun to not just own an index fund, where you can just point to, I own the S&P. That's terrific. But it's really cool to say, I'm part of Parallel. Like, isn't that awesome? Like, I'm part of 3 Common. When you signed up for the event here tonight, you went through 3 Common's platform. Or I'm invested in Construction Club, right? Like, anytime they're on, and we've got those 3 founders here tonight, so please go say hi to them tonight. But it's, it's really cool to be a part of the journey for these founding teams, these founders and their teams, and what they're building is really cool. The impact that they're bringing to our province is phenomenal from an economic standpoint, and there's no reason why we can't increase the investment in this sector and increase the jobs in this sector. Manitoba has long been very much agriculture, manufacturing, and government, and we can certainly add tech to that. So I want to touch a little bit on what you mentioned earlier about the Manitoba Small Business Venture Capital Tax Credit. That's a mouthful.
SBVTC. That's the acronym, right? No?
SBVTC.
SBVTC.
SBVTC. Like I said, it's a mouthful. And that's a terrific thing that was implemented from the government. That is a 45% tax credit for direct investments into Manitoba businesses. So startups are able to apply for it and then have direct investors come in and receive that 45% tax credit when they make that direct investment. That legislation was made before a fund existed in Manitoba. We're currently working to help to see it be implemented as for your investments into fund investments like Trillick as well. But for the time being, what we're doing, and this is a way that I see it as a win-win-win across the board, is, like I said, for founders, we're only going to put in maybe a third or a half of their total round, and we need to help raise the rest of that for them. So our limited partners get first co-investment rights, leveraging that tax credit. If the companies are set up for that tax credit, they can then co-invest in these pre-vetted deals that the fund has already shown conviction behind. and then they can co-invest with extra money to double down on the founders that they really are interested in and take advantage of that tax credit. It helps the founders fill their rounds faster. It helps the investor take advantage of that tax credit and perhaps double down in a founder that they really have conviction behind, an industry that they really have conviction behind, and it helps me fill out that brand. Yeah.
I wish you success. Changing the legislation.
Yeah. Well, that's not easy, and that's why we're doing this workaround as we go. Maybe I'll talk a little bit about how this fund specifically works and the mechanics of it, or maybe do you want to touch on it actually? I've been speaking a lot.
Sure. So the minimum spend is $100,000, and it works for, did you say it was 5 years?
So that's the committed capital.
Mm-hmm.
So that's the commitment made into the fund. However, when we closed the first fund, it was a 20% capital call. So you make a commitment into the fund of how much you will spend, or how much you will commit to investing in the fund itself, and then we call capital as we find investments in order to deploy. So we don't want to hold everyone's capital all at once. There's no point in keeping it in a bank account. Put it to work in your own businesses or in your own investments. And then as we find investments that we want to deploy in, we will call the capital from investors on either on 2 weeks' notice, and we will never call more than 50% of that capital within a 12-month period, at which point we will then deploy the funds directly into our investor.
And then you get 10 business days notice before the capital call, so you have time to prepare. And it's not just gonna be overloaded on you all at once. And then year 6 to 10 is when you would start to see your return.
Yeah, that's typically when distributions start to happen for funds, and as that distribution waterfall happens, the LPs get their cash back first. So for every dollar that you invested in the fund, you then get that back in full, plus a hurdle rate of 8% IRR for the time the money was in the fund. And then it gets split 80-20. 80% of every dollar goes to the limited partners, and 20% goes to the general partner pro rata. Yeah, so that's a bit of the mechanics, the boring stuff of the fund. Maybe let's talk a little bit more about why this community, or I guess we talked about why the community needs it. Maybe we'll open it up. I'm sure there might be some questions on the floor that we could all maybe answer here. Yeah, Arlen.
To invest in your fund, what's your minimum check size? And do you have to be an accredited investor?
Great question. Yeah, it is. So you do have to be an accredited investor, and it is a $100,000 commitment. So that commitment will be made over the lifetime of the fund. We have to call that capital within 5 years, but it will be capital calls, as I mentioned, as we deploy into companies. Yeah. Yeah.
Thanks for everything. The boring part, the mechanics, thank you for explaining that. That was part one of my question. Part two is if you're not in a position to invest at that level, you still want to support, or you want to learn more, where would you point somebody to?
I would point someone to our angel group. So for any woman who wants to invest in at a smaller check size, we've got the Women's Equity Lab, which is a group of angel investors who are women. You don't qualify. Apologize. We used to have Startup TNT, which I hope will be back very soon. That is another angel syndicate where you can invest $5,000 checks into companies. And then also just by getting involved, talking to founders here, a lot of them will take, some of them, not a lot of them, but some of them will take smaller direct investments when they're doing a round. Some of them won't, and that's why the benefit of coming into a fund for some of the better deals makes a lot of sense. But some of the really early companies will take direct investment that are at lower amounts through leveraging the small business venture capital tax credit.
Thank you.
Yeah, Arlen.
When you invest in companies in maybe a pre-seed round or even a seed round, do you invest on a SAFE, an SAFE, or are you investing directly for a price round or equity? Can you talk about how you guys invest and if that changes over the stage?
Yeah, great question. Thank you for that. So of the 3 investments that we've done so far, all have been on safe notes. And so the purpose of that is the main instrument that is used not only in pre-seed and seed, but it's really important for setting up companies for success long-term as they raise venture capital. So we want to make sure that we're setting them up with an instrument that makes sense, that the industry at large is aware of, and that is a very founder-friendly deal, and also reduces a lot of the legal costs. So when you go direct investments, there can be significantly more legal costs associated with it, whereas a safe, it's generally lower cost across the board. And then often there'll be a side letter in addition to the traditional safe terms, and that will cover anything that is not typically offered in a safe. Yeah. Yes.
Yeah, this is more so just clarity. So for those of us who may not be super aware of financial terms, what's a safe and what are other methods in which one could invest in a company that is not a safe?
Yeah, so SAFE stands for Simple Agreement for Future Equity. So you're not actually getting equity in the company. You are creating a note that will be, upon conversion of a later equity financing round, it will be triggered at that point to give you a percentage of equity in the company. There's other ways where you can do a straight convertible note or direct equity, which is called a price round. But often companies are too early to provide a firm valuation on them when they're really early stage pre-seed, and so that's why you do the valuation cap on a safe note rather than directly value the company at that time.
Just to highlight, there didn't used to be anything called a safe. That was an instrument that was created in Silicon Valley.
Y Combinator, right?
It was Y Combinator, where Taiv actually got accepted. First company ever accepted to Y Combinator, probably one of the most famous incubators in the world. So safe, if you think of a company starting up with a big idea and you're supposed to try to create a valuation of your company when it's way too early, they came up with this idea of just bet on the idea, put money in, you're going to benefit from being in early, and then eventually when they are big enough that you can actually decide what the company's valuation really is based on real market factors as opposed to just guessing, then you have what's called a priced round, and then you come up with what's called a term sheet that has pricing and value, and somebody who invested in this safe converts into this other investment mechanism, and then you actually have a real equity stake in the company. In the beginning, you're investing in it with hoping for a future priced round.
Saw a question in the back there. Yes.
Yeah. Can you leverage the SBVCTC through SAFE? Can you use
Not
SAFE?
not currently, but we're trying to change that.
Yeah, and when the SBTC tax credit came out of Manitoba, there was no such thing as a safe. Nobody was doing that. So we just haven't changed the terms of legislation in 10 years.
Yeah, there's
10 plus years.
We're working hard to update that so that it's more family friendly.
And it costs less resources, right? Because it's more expensive to have to hire the accountants and the legal to get that far, and then get people to invest with the SBVTC.
Your friends at North Forge and Manitoba Innovates are making a big petition to the province to make that happen.
That brings up a good point, like to actually hire the lawyers and the accountants and everybody to value your company and put together all the real official paperwork is a lot of money. You're looking at least $70,000 plus, and you might have only been trying to raise 200. So there goes most of it just to your legal fees. So having this safe instrument, oftentimes they're 400, 500,000. I always say, well, how did you come up with that number? And they go, oh, somebody told me that's a good number. But what you're really buying in on is you're getting some benefit getting in early, and say you get a 20% top up on what you would have invested if later on they actually price the round.
Jordan. Yeah.
I'd love to know for people who want to help the Trillick Venture Fund but don't have the money to invest. You're looking for obviously money for the fund. You're looking for good deals to spend on. What else would help the fund? What challenges are you trying to solve for?
Yeah, thank you. So the question was, how do you help Trillick and the fund and the community at large, essentially? It's so if you're interested in investing, please come and talk to us, talk to any of the limited partners. We would love to talk to you about that. If you're not in that position, obviously deal flow. If you know great companies that are looking for investment, that's our game. We're looking to invest in really great founders who are building really great companies. That's what we're interested in. And if you know anybody else that you have in your personal network that would be interested in potentially, if it's not quite you're at that stage yet, but if you know someone who may be, that could be a really terrific introduction. Also, our community of support. So, like for instance, you, Jordan, you had a tremendous amount of value to a lot of startup founders in a fractional capacity. And so, when we're looking at help for startups, it's who in this community can help. And I think a lot of founders, they don't necessarily, especially before they are capitalized with venture capital, they don't have the money to spend on full-time employment. That's where fractional folks come in handy and can add so much value. So it's, again, it takes a full village to do this, and that's what we're really trying to do. And Paul, that's twigging something in your arm, I think.
No, I was just going to say, like, if you're too early for a Trillick stage, like, come see Manitoba Innovates. We have a loan program to get you to that point, right? We're trying very hard to bridge that gap of, like, hey, I love 90% of what you're doing, but, your go-to-market strategy is figuring it. Like, if a cap table problem, like, come to us. We will loan money to you to, like, engage local professionals, whoever they are, to get you to the point where it's a slam dunk for Trillick, and then very much in partnership, whether it's Trillick or somebody else, like, we're happy to help make that happen.
And I think another thing that could add value to the community is getting to know what startups exist here and who the owners are, and just spreading the word about them. Like, not everyone knows about Parallel and Construction Clock and 3Common. Like, you might have no idea that company even exists here, because with software, a lot of it is behind the scenes, and you're just on a computer and you have no idea who made it. But literally getting to know, like, what are the apps that were made here? Like, who is a teacher and they use permission click every day, they have no idea that it was started here, and it was really successful. So I think just, like, being a part of the community and getting to know who's who can actually, like, help us a lot.
Yeah.
I think there might be some value in speaking on what kinds of investments and how much investment you should be taking at each stage of your startup for people who are trying to start companies. So from early stage ideation, you've got some traction, and now you're trying to scale that. How would you structure getting money in that stage? If my question makes sense.
Yeah, it makes sense. It's a very much an it depends question. I would say you don't want to take more money than what you need, because it just dilutes you as a founder, and it makes it harder to scale on a venture path. So it's really important that you take just the right amount that is going to allow you to de-risk whatever it is that you're doing. So you're taking money to essentially prove out your thesis. You have an idea. I'm going to use this cash. It's going to do this exactly for me. It's going to allow me to hire these people. It's going to allow me to build this thing, and at that point we've now de-risked the company, and we can leverage that to then go raise more capital to show that we're on the path to continue to build in another way. So you're always wanting to take it to that next level. You want to have a very clear goal as to what you're taking the money to do, and then once you meet that, then it's time for that next round.
Yeah, you really start with what are you trying to accomplish, work backwards, what do you need. It's not how much you take, it's how much do you really need. Because remember, you're giving up ownership in your company by raising money.
Sorry, I still want to comment on that. So I totally agree with the thesis of less is more, like take as little as you can. However, if you're at a point of scaling and you need, like, if I could hire 10 more salespeople, I would have 1,000 times more business. Like, that's very convincing to an investor. Like, let's go to work, let's make this thing happen. Like, don't struggle as someone who's, like, trying to do little things, especially in a software company with global reach. Like, let's go to work. Think Skip the Dishes, think Neo Financial. Like, there are companies there that are scaling, like, the way up, like these unicorns. When you're ready to go, you got shit figured out, let's go to work, because that's a compelling case.
Absolutely. And
So don't be an idiot.
So that's so Paul's talking about when you have things that are proven out and working. So, like, you have a lever that this amount of input creates this amount of output, and then, okay, I'm going to 10x that input so that I can 10x or more of that output. And so that's that concept on scaling. Yes?
From the initial pitch to the check in the bank, what's that duration of the time?
For a portfolio company?
For like a startup getting like cash in the bank from the
Yeah,
pitch.
yeah. So great question. So we want to lower barriers as much as we can. So really, we're trying to build a compelling case as fast as we can on a founder, and to either know whether it's a yes or a no. Once I do that personally, then I take it to my investment committee, and we go back and forth and debate the living crap out of it. Right, so that's one of the benefits of having a really strong investment committee of people with all sorts of different perspectives and expertise, is that we then just really have healthy discussion and dialogue as to why it won't work, why it would work, why it makes a good investment. And so I can't tell you exactly how long that would necessarily take. It truly depends on the idea. But we try and make sure that we get answers back to founders fast, because it doesn't do anybody any good holding them in the low.
But remember, you're usually, by the time you're into a Trillick investment, you're probably getting investment from multiple companies. So you've created a window called a round, that you've picked a date. You know, we're trying to raise X amount of dollars by this date. So you typically are defining the close date, and then you just want all of as much of the money or more before that close date. But there is legal and time and there's reality of paperwork. But remember, you're probably not just talking to one organization.
Yes?
Do you have like specific investment themes, and is there like a certain level of traction and validation that you want?
Yeah, great question. So we are not, we are industry agnostic, so we will invest in any tech-enabled or tech-specific business. As far as how far you are along, it kind of depends. We will go, so you can be pre-revenue, but you have to have strong user growth. And so depending upon if you're at pre-seed, you may be pre-revenue, but you have to have some indications as to why this is going to work very well. So some really early signs as to, again, we are pouring capital on the fire for growth. So what is the lever that we are pulling with this cash in order to make it print out more? So there has to be some proof of that. Yeah, Chris.
Do you want companies to talk to you before they're at that stage where you would consider them for investment? If yes, how early is too early? And then the last question is, for companies that you say not right now, what's the suggestion for them as to like how to follow up with you, so that maybe a few months down the line you come back and then say already.
Yeah, great question. So that was how should startups approach us, and how early should they, and what is the kind of the next steps if they're too early? So I would say I'm very comfortable having conversations with any founders who are looking to build something. I want to be able to be a resource to help them, point them in the right direction if it's not ready for us yet, but point them to the resources at North Forge or point them to the resources at Manitoba Innovates, help them connect with the right people so that they can help build the thing, build what they're trying to achieve. And then I will definitely weigh in with my perspective as far as what would make their company investable and where they would need to be at from a metric standpoint, and what would then look attractive to come back to further that conversation later down the road. But that will be a case-by-case basis, and it would be I would be able to provide tangible advice as far as where I would like to see their company before I would want to have another conversation. And I think Chris, when you were up on stage here, yes, put that hand up. When you were up on stage here, you talked about how when VCs would come to you and they would say, well, when you get to this level, reach back out, and then you would type that in the notes, and then you would get right back to them immediately once you hit that. And that's exactly what VCs want. They want you to be prompt. They want you to be on top of on top of it, because it shows that you're listening. It shows that you're keen, and that you're actually meeting the goals that you've set for yourselves and the milestones that they've in turn set with you. Any other questions? Well, you got us here. Great. Well, thanks everybody for coming out tonight. This is a really great turnout for Tech Thursday. Thank you, Sandra.
I just want to, thank you guys very much. I think this is really important. Like, raising money is not a simple thing, and it's not a one-off, and funds vary between funds. And what I want to say is, please reach out to all of us as a community. We'll figure it out together. And we don't need to do what Alberta or San Francisco or New York is doing. Let's do it in a Manitoba context and make it happen for us. Also, for those that don't know, this weekend is Ramp Up Weekend for North Forge. If you're not signed up, get on that shit, because you're probably too late. But still show up anyway.
What is it? What is
Ramp Up Weekend is, you got a good idea or even a dumb idea, we'll figure out whether it's one way or the other in 72 hours or less. So sign up online, I'm sure you can find it. It's a great event, and it's launched a lot of companies here. So please jump in, it's a great event. So see you Friday, Sunday, Saturday, awesome. And thank you guys very much, I appreciate the leadership. No one needs